Good morning and welcome to Market Cafe with me, Ankur, Mishra and Kanishka Sarkar. In next 1 hour, we'll bring you all the news that matters to you before opening of market. But let's get started with US first. It was a tough session in US markets. But Kanishka, help us understand how to make sense. Two of the indices were in red, one in green. Please break it down for us.
That's right, Ankur. First of all, a very good morning to you. That is true, but if you look at the monthly move, the S&P 500 on Friday closed the month of May with more than 6% of gains, which was actually best monthly performance since November 2023. The tech-heavy Nasdaq Composite that surged more than 9% for the month, whereas Dow that rose about 4% in the month of May. However, like you said, Morgan Stanley is also skeptical about whether May's market momentum is going to continue or not. And rightly so, because if you look at the stock futures, they have been showing a downtrend. Meanwhile, investors will also be eyeing a slew of reports that are due this week that could provide insight into how tariffs have affected the US economy. Now, we must also watch out for the impact of Trump's latest comments, as he's told US steel workers that he will double tariffs on steel imports to 50% effective from Wednesday. So that's what we'll be watching out for and the market impact of it.
Yes, but more importantly, let's also shift our focus to crude, which has actually risen after the important meeting which happened on Friday. The WTI crude has actually risen around 2% to around $62. And if you talk about Brent crude, that is around $64. But why it has happened? Because OPEC has decided to pump more oil. The world's top producers agreed to raise output by another 411,000 barrels a day in July, which weighed on crude prices over the weekend. Analysts say Saudi Arabia and Russia are hoping more barrels can make up for their falling revenue. Ashesha is actually joining in with more details on this story.
Well, yes, oil market will be in focus today, and this is on the back of the big announcement that came over the weekend, where OPEC Plus has gone ahead and increased the output by 411,000 barrels per day. This will be with effect from July. Remember, this is the third consecutive month of such announcement. It was already announced in the month of April that they will go ahead and increase their output by 138,000 barrels. This was for the month of April. For May and June, 411,000 barrels, and the same continues for the month of July as well. Remember, this was largely on expected lines. The street was penciling in output hike, and that is perhaps the reason oil was down nearly 1.5% last week, after a fall of about 1% that we had seen in the week prior. So largely on expected lines, but remember, this is a part of a larger scheme of things. 2.2 million barrels per day output. Voluntary cut was something that was announced by OPEC Plus in 2023, and this is being slowly unwound with effect from April, and now OPEC Plus will go ahead with this output hike with effect from July as well. So big announcement coming in for the oil market. Yes, this is largely in line with what the street was working with, but sentimentally negative for the oil market.
Getting us all those details and breaking down the OPEC Plus's move for us. But moving on, Peter Maguire, the CEO of AustraliaTrading.com, also talks about whether oil will continue to be in that range of $60 to $65 per barrel in the short term, or will it slip below that $60 mark? Now listen into the key factors he said we should be watching out for.
I really do think that WTI 55 will be the handle to really keep a very close eye on. Probably 58 to say $60 for Brent. I feel as though on the downside, should it break that number, there are many analysts out there, Aisha, saying it's going to be sub 50 come, that September, October sort of timeline. I want to get through the next 2 months and really get an appreciation what's going on with the tariffs and other geopolitical concerns, the Russia situation with the Ukraine and so on. So there's a lot of, as they say, a lot of water to pass under the bridge yet until we get a real indication. But I think it's going to be better than worse. Better for consumers. And if you're a producer, well, maybe, they're going to have a bit of a tough time.
On the same issue, Minister of Petroleum and Natural Gas Hardeep Singh Puri said that crude oil prices are likely to stay near $65 per barrel due to the ample supply of oil in the global market. Speaking at the CII Annual Business Summit 2025, the minister said high production is weighing on the oil market. Let's listen into why he said so.
Insofar as natural gas is concerned, I think the good news is that after 2027, there will be more gas available in the global marketplace. That is what it will help us. Because frankly, there are a lot of power plants, I think, power plants which are lying closed because you didn't have the gas, etc. So I see gas prices becoming stable and coming down. I think we are doing okay, but my sense is the prices with more supplies becoming available, prices will be close to 65, not to 80.
All right, that's the commentary coming in from the Union Minister on oil prices. But let's move on and get on to some other top stories of the time. Now, yet another tariff threat by US President Donald Trump. Now, he has announced plans to double tariffs on steel imports from 25% to 50% effective June 4th to secure the steel industry. Now, this announcement came during a speech at a US steel plant in Pennsylvania. Right after that, his Truth Social post slated that the tariff on aluminum will also be double. Let's go across and listen into what the US president had to say.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that. So we're bringing it up from 25%, we're doubling it to 50%, and that's a loophole. And
we also spoke to our expert Adit Velikar, Senior Research Analyst, Metal and Power Axis Securities. Let's listen into what he had to say on double tariffs on steel imports and its effect on India.
Here domestically, we are having a safeguard duty which kind of protects our steel imports. And we have seen that steel imports have stood down for India. But at the same time, if we can see on an import parity basis, the steel prices coming from China are almost at a similar level to our domestic steel prices, or even a few percentage point below to our domestic steel prices. And with this increase in tariff, it will further put pressure because the Chinese will increase their competitiveness and will further lower their offers to exports market. So it only increases our competitiveness and our risk for domestic steel prices. Our steel mills will not be able to hike steel mills further from the supported levels.
All right, that's the latest word, expert word coming in on steel import duties. But in fact, let's also get Ashesha to break down for us what this latest tariff move would mean for the global economy. Ashesha?
Well, yes, it was just in February this year that Donald Trump had gone ahead and increased tariffs on steel and aluminium from 10% to 25%. And now this has been increased further from 25% to 50%. This will be with effect from the 4th of June. And Donald Trump says that this is to protect the domestic steel industry of the US. So yes, a big move that has come in. But remember, as far as US imports are concerned, Morgan Stanley says that US imports about 17% of their steel requirements. Canada, Brazil, Mexico and South Korea. These are the four major exporters of steel to the United States. And as far as aluminium is concerned, 79% of imports come in from Canada. And for India in particular, we are not penciling in any kind of major impact. Of course, sentimentally, it could be negative. Globally, supply of steel and aluminium could surge, and US, remember, is practically locked for global supply of steel and aluminium, which could enter Indian markets. Remember, cheap import of steel into India has already been a concern for the last several months, and now that could intensify going forward, because of which we could see some amount of pressure on prices of both steel and aluminium. So yes, no major direct impact on Indian steel and aluminium companies, but perhaps some sentimental negative is what we could see, especially in terms of prices in the domestic market.
Thanks, Ashesha, for breaking it down. But on the same issue, the European Union is threatening swift retaliation after Trump doubled US steel tariffs from 25% to 50%. The EU says that the move adds further uncertainty to the global economy and has warned that countermeasures could kick in by July 14 or sooner. Trump made the announcement at a rally in Pennsylvania, linking the hike to a controversial Nippon Steel deal.
That's right. Let's move on and get some more news on the economy. Now, US PCE, that is Fed's preferred inflation gauge, also rose 0.1% month on month and softened at 2.5% on a year-on-year basis, meeting the expectations. Now, the reports have also revealed that personal spending data, which grew by 0.2% on a month-on-month basis. However, US goods import, that saw the biggest drop, falling 19.8% on a year-on-year basis.
Donald Trump has actually accused China of totally violating preliminary trade deal meant to pause retaliatory tariffs. Trump claimed the US kept its side of bargain while China slow-rolled compliance. In his true style, he posted so much so being Mr. Nice Guy, which made futures jittery as his officials echoed the warning, calling China's move completely unacceptable. Besant agreed that trade talks with China has stalled, and we need to see that what actually happens between the much awaited call of China and US.
That's right. Like you said, a phone call could be in the works between Donald Trump and Xi Jinping. Now, top White House economist Kevin Hassett says that both sides are willing to talk, though no date has been set as yet. Now, Hassett added that daily talks are ongoing and that they are going to have a wonderful conversation soon.
Yes, exactly. And US Commerce Secretary Howard Lutnick is brushing off concerns that a recent court ruling weakening Trump's tariff authority could derail talks with Europe. In an interview, he said legal hiccups maybe caused them a week, but insisted negotiations are on track. He dismissed EU officials' claim of having leverage, saying, "You can't listen to silly people making silly comments."
That's right. Now, moving on. Morgan Stanley predicts that the US dollar could plunge 9% by mid-2026, hitting levels last seen during the pandemic. And the bank sees slowing US growth and aggressive Fed rate cuts totaling 175 basis points as key drivers. Now, strategists expect safe haven currencies like the euro, yen and Swiss franc to gain in this time.
Moving on, Federal Reserve Governor Christopher Waller sees a path to rate cuts later this year if inflation stays in check and the labor market holds steady. While upcoming tariffs may cause a short-term price spike and a modest job losses, Waller says Fed should look past if long-term inflation expectations remain anchored.
Moving on now, just ahead of peace talks in Istanbul, Ukraine has pulled off its longest range drone attack yet, striking deep into Russia and reportedly destroying 40 warplanes across 4 air bases. Codenamed Operation Spider's Web, the year-and-a-half-long mission hit Russia's nuclear-capable bombers using drones launched from hidden truck sheds. Russia also launched its largest drone swarm of the war. Meanwhile, a bridge explosion in the border town killed 7 as both sides escalate just ahead of peace talks.
And Kanishka, what should have been a night of global football glory for Paris turned violent. Over 500 people were arrested and 2 killed during wild PSG celebrations after their first ever Champions League win. Police clashed in with crowds on the Champs-Élysées, smashing shelters, lighting fires and injuring dozens. An investigation will determine if the fatalities were linked to the celebrations.
That's right. Moving on to some news updates on the auto sector. Now, Ford's recall spree isn't slowing down. The automaker is recalling nearly 30,000 F-150 Lightning electric vehicles in the US due to a control arm issue that could lead to a total loss of steering. That's on top of a much larger recall, over 1 million vehicles with glitchy rear-view cameras. From Broncos to Mustangs, the bug delays of freezes the backup feed, raising safety concerns.
After global stories shifting back focus to India, GDP growth for final quarter of FY25 comes in at 7.4%, higher than what the economists and experts were penciling in. The real GDP growth print is at the highest level since Q4 of last year. Prakash is joining in with more details on that data.
Yes, GDP numbers show a clear uptick in economic activities in the fourth quarter of FY25, leading to an overall GDP growth of 6.5% for FY25. As per the provisional estimates, various sectors have shown significant growth, while challenges coming from the external sectors may pose a risk. Chief Economic Advisor has clearly mentioned that India's growth momentum continues in Q4 of FY25. Private consumption remains resilient. Significant growth in urban demand. In fact, that can be seen through domestic air passenger traffic, which grew by 9.7% in April 2025. Private investment is picking up. Urban unemployment numbers are coming down. Gross FDI remains robust and steady, but FPI shows volatility, decline in crude prices. Of course, a significant development and positive development for the country, a potential to bring down import bill. When it comes to outlook for FY26, Chief Economic Advisor has clearly stated that the global risk factors will continue. However, amid global uncertainty, India faces a smaller forecast, cuts in global forecast. Food inflation, remains benign due to good Rabi harvest. Export remains robust with 11 months of import cover. However, diverging central bank rate paths may impact capital flows and financial market, and therefore government has retained its FY26 growth outlook at 6.3 to 6.8%.
Okay, thank you, Prakash, for getting us all those details. Now, moving on, Finance Minister Nirmala Sitharaman also lauded the GDP numbers and the robust figures in Q4. Listen into what she had to say.
Just a couple of hours ago, we had our GDP numbers come. Quarter four, even as we lived through it, everyone would tell us, oh, Indian industry is not investing, capacities are not widening, not expanding. What would happen? I'm glad, and I'm sure many of you all would have already seen it. India's industry, the manufacturing activity, have all been so good during quarter four. And quarter four's growth alone was 7.4%, and the data's come out today. And as a result, for the entire financial year of 24-25, March 31st, 25, which has just gone by, 2 months, we've just completed 2 months, the GDP numbers are 6.5.
Apart from Finance Minister Nirmala Sitharaman, CA Nageshwaran highlighted key positives like falling crude prices and rising private investment while cautioning about global rate divergence. Let's listen into what he had to say.
Decline in crude oil price from around $80 per barrel to the 60s, and we all expect OPEC to announce another production increase in July as well. And considering that, I think clearly the upside to crude oil prices seem to be capped, and that is a good news for India as well, from both from a fiscal perspective and from a consumption perspective. Central bank rate policies are going to diverge globally because some countries are looking at stagflation risks, whereas India is looking at this moment, in the context of where the world is, a fairly benign growth inflation environment. We retain our growth outlook as something between 6.3 and 6.8%. Private consumption, especially the rural rebound and resilient services sector exports and steady capital formation as key growth drivers. Of course, international agencies are adjusting their growth numbers depending on global developments and domestic developments, and those the range is very similar to the kind of range that we have.
All right, that's the comments coming in from the CEA. But we also caught up with a whole host of experts to decode what the latest GDP data implies. Let's take a look.
That all the high frequency indicators that were coming out throughout the year had all pointed in the positive direction. Look at the PMIs, if you look at the tax collections, I think they've always been fairly buoyant. So I think this gave us some sense that the Indian economy is on this particular path of 6.5%. And quite clearly, I think this is a very good base to start off with, because once we move over into 25, 26, what's really going to be critical is as to how exactly this growth rate is maintained. And we believe that we will still be in this particular range.
After seeing today's number, I would tend to be more positive to 6.5 plus upside. But because of the global slowdown, which can get, which is, like at least 1.5 quarter is actually getting wasted while people are trying to figure out what's the tariff situation. And that's where it will impact the overall world GDP. And that's what is a little bit worrying. And and that would reflect on your risk valuations also.
It is impressive compared to other economies. We would be one of the fastest growing economies in the world. But when you look at our inflation metrics, it's telling us that we can grow much faster. And monetary policy is growth focused. We don't have the issue that the Fed has, where they have issues on inflation. In our case, RBI in a way is relatively more comfortable. They can completely focus on growth, and we do expect a 25 basis point cut in the June policy.
Moving on, apart from robust performance in Q4 in GDP, the central government managed to meet the fiscal deficit target of 4.8% of GDP for 2024-25, that is FY25, according to provisional data released by the CGA. In the revised estimates presented to Parliament in February, the government had pegged the fiscal deficit or gap between expenditure and revenue at rupees 15,69,527 crore or 4.8% of GDP. The lower fiscal deficit target for FY26 was expected on hopes of strong tax collections, despite government's continued capex push that is crucial to shore up the consumption and create jobs and help India to achieve its aim to be third largest economy by 2030.
That's right, Ankur. Let's also take a look at how GST collections fared in May. In fact, they reached a strong 2.01 lakh crore, registering a healthy 16.4% increase compared to the same month last year. Now, the central GST component that accounted for 35,400 crore rupees, while the state GST contribution stood at 43,900 crore rupees. Additionally, the government collected 12,900 crores as GST cess. Now, the steady rise in GST revenue adds to the growth picture, reflecting decent consumer demand and also ongoing recovery across various sectors. Well, with that, it's time to take a very short break on this edition of Market Cafe, but we'll keep you posted with more news and updates on the other side.
Welcome back after the break. You're watching Market Cafe with me, Ankur, Mishra and Kanishka, Sarkar. Let's take a look how Asia Pacific markets are performing. Actually, it is all red all around after renewed Trump tariff threats, starting from Hang Seng, which is down over 2%, followed by Nikkei, which is down by 1.5% or so. Shanghai is also down 0.5%. And even Australian markets have opened in the red after Trump has announced renewed tariffs on steel as well as aluminium. But if you look at Nikkei particularly, the data which came in on Friday on inflation, core inflation was worsened than the expectation, around 3.6%. The expectation was around 3.4%. So you can see the cut of 1.5% coming in there. And Hang Seng is the weakest among all Asian markets, down over 2%. But even Nifty implied open has opened lower today, around 20 points down as we speak. So all in all, weak cues coming in from Asian markets, and GIFT Nifty is indicating a muted start. And Commerce Minister Piyush Goyal is in Europe this week on a 5-day official tour aimed at boosting trade ties. Goyal's engagement span France and Italy with key meetings which are supposed to happen with European Union officials and global trade leaders. High on the agenda are accelerating the EU-India free trade deal by 2025. In fact, the government has been quite hopeful on these trade talks ever since there was a threat which came in from US regarding the trade deal. But Goyal is also meeting ministers from 6 major economies and industry giants like Renault, L'Oreal and Total Energies. Piyush Goyal's important visit will be in focus as India is also in negotiation with United States for a trade deal.
That's right. We'll be watching out for Piyush Goyal's Europe visit. But with that, let's slip into news for the hearing impaired.
Welcome back after the break. You're watching Market Cafe with me, Ankur, Mishra and Kanishka Sarkar. Let's shift focus to the IPO market. One of the most awaited IPOs is already making waves. NSE's valuation has surged by more than 40% in the unlisted market. That happened in just 1 month time period. This is aided by comments made from SEBI chairperson and NSE MD and CEO on the IPO progress. Anjali Palod is joining in with more details on this story.
The valuation for National Stock Exchange has surged by around 45% in the month of May. If we look at the prices of the unlisted shares, according to sources at the start of the month, this was around the 1500 to 1650 rupee band. But now by the end of this month, this has surged to around 2300 to 2350 rupees per share, and that's a surge of almost 45 to 50%. Now if we calculate the valuations, this was around 3.8 to 4.2 lakh crores at the start of the month, and that has surged to around 5.6 to 5.8 lakh crores in terms of valuation. Now this puts NSE at the 9th rank in terms of valuations of Indian companies, and along with this, if you look at the recent numbers in terms of financial year 2025 that NSE has posted, it has posted a profit of rupees 12,188 crores, which is up 47% year on year. And in terms of revenue, it is for FY25, NSE's revenue stood at rupees 17,141 crores, up 16% year on year. The volumes traded on NSE in cash market as well as equity futures, both of them surged by around 40%. So that's the numbers here. But the surge in its valuation is of course coming from a likely IPO from the company, and NSE is currently awaiting an NOC from the markets regulator for its IPO. And the latest comments that came from the SEBI chairman on NSE IPOs seemed positive, with him saying that the issues that NSE and SEBI are working together to resolve the issues with the NSE IPO.
All right, thank you, Anjali, for getting us all those details about the NSE IPO. But moving on, let's take a look at some earnings counters. Now, beauty and fashion retailer Nykaa reported largely in-line set of numbers in Q4. Profit, though, missed estimates. The figure came in at 20 crore rupees, which is 2.8 times higher on a year-on-year basis. Snehi Shah joins us with more details.
Well, yes, so if you take a look at Nykaa's Q4 numbers, largely in-line set of numbers with what the street was estimating. Revenue, EBITDA and margin are in line, while we've seen a miss versus street expectations coming in on the PAT, which is the net profit figure. If you take a look at the earnings fine print on a consolidated year-on-year basis, revenue has come in at 2,062 crores, which is up 23.6% year-on-year. Net profit has jumped from 7 crore to 20 crore on a year-on-year basis, but it's still under street estimates. EBITDA has come in at 133 crore, which is an uptick of 43%. EBITDA margins have also seen quite the uptick. Take a look at the overall GMV, which is your gross merchandise value growth. That has come in at 27% on a year-on-year basis. The street was estimating 24. So good performance on the overall GMV basis. If you take a look at it segmentally, for BPC, strong growth has continued, double-digit growth has continued. It is slightly below what the street was estimating, but that's because the overall industry growth has also tapered down. So overall, BPC has done well. Revenue has gone up by 25%, GMV gone up by 31%. Net profit for the BPC segment, which is your beauty and personal care, also up by 40.5% on a year-on-year basis. For the fashion segment, revenue has gone up 11% in line with our estimates. Net loss, however, has widened this time around at 36.5 crore thereabouts compared to a loss of 29 crores on a year-on-year basis. GMV has gone up 18% on a year-on-year basis for the fashion segment. Now, if you take a look at what the company has said in their con call, they have $1.8 billion of GMV across platforms. More launches are on the way. Dot & Key has grown 14 times since its acquisition, and they're on the way to another profitable quarter and another profitable year. In terms of some other updates, they've approved the merger of LBB into the company, and they have approved the demerger of the eB2B business. Now, some quick brokerage view. Nuvama has maintained their buy rating, target price at 235. Morgan Stanley has maintained their overweight rating, target price of 191 rupees per share. So that's a lowdown on Nykaa's numbers, largely in line with the miss on PAT.
Thanks, Snehi, for those details. Apart from Nykaa, Apollo Hospital numbers are also out, and profit has beaten estimates as it rises 53.5% on a YOY basis to around 390 crore rupees. Meanwhile, revenue was in line, and what we had penciled in, it was better than that, and it rose 13.1% to come in at 5,592 crore. My colleague Varun is here with more details on this. Good morning, Varun. Take it away.
Good morning, Ankur. So it has been a mixed quarter for Apollo Hospital, wherein the revenues have been in line, but it's a beat on profit because the profit has risen by around 53.5% to around 390 crores. We were expecting the profit to come at around 374 crores. Although the margin, we were expecting it to come at around 14%. It has been a slight miss. It has been around 13.8%, but on a year-on-year basis, if you look, it has risen from 13% to 13.8%. If you look at some of the key KPIs, the RPOP has risen by around 7%, and also the occupancy levels on a year-on-year basis, it has gone up from 65% to 67%, but on a quarter-on-quarter basis, there is a slight decrease. Also, the company says that it has been a milestone year for the company because the overall revenues, if you look, they have crossed around 20,000 crores in FY25. In segmental, the healthcare service that has risen by around 10.1%, Apollo Health and Lifestyle that has shown an increase of around 11.1%, and also Apollo Healthco that has shown an increase of around 17.2%. Also, the GMV for Apollo 24/7, it has come at around 795 crores. Now, the company says that it would be expanding in some of the micro markets to basically in Sajarpur, basically to expand its Bengaluru operations, and it would add around 700 beds in next two stages. Also, the company has said that in the next 5 years, the company would be doing a capex of around 8,000 crores and would be adding around 4,300 beds. The company says in the con call that it is on track to achieve cash EBITDA break-even in the Healthco by around Q2 or Q3 of FY26. And also the management sees the GMV growth of around 25 to 30% in FY26. Now, if you look at brokerage houses, Nuvama has a buy call on this stock with a price target of 8,200. Motilal Oswal has a buy on the stock with a price target of 8,050. Although JP Morgan has an overweight call, but they have cut their price target from 8,800 to 8,600, and Jefferies has a buy call on the stock with a price target of 7,900. So it has been a mixed quarter for Apollo Hospital, with the profit giving a beat, the revenues are in line, and margin a slight miss.
All right, thank you, Varun, for getting us all those details and the lowdown of Apollo numbers for Q4. But moving on, we also have auto sales data coming in for the month of May. Srishti is joining us now to give us all the details. Good morning, Srishti. What do the numbers indicate?
Well, yes, when it comes to May auto sales data, kind of a mixed bag that we are seeing this time around. Firstly, from the passenger vehicle segment, let's start with that. Tata Motors has come out with the numbers where they have seen a decline of 8% on a month-on-month basis in the passenger vehicle segment. The numbers are below than what the street was expecting, but M&M has indeed again outperformed the market and the street expectations. Numbers better than estimates. 84,110 units is what the company has clocked in, but that's absolutely a flat growth on a month-on-month basis. But given the tepid and slow growth environment, especially in the passenger vehicle segment, yes, of course, M&M Auto has been an outlier there. Coming to the commercial vehicle segment here in Eicher Motors VECV, numbers were actually in line to what the street was expecting. But Tata Motors commercial vehicle segment, yet again a disappointment on this particular number as well. Now let's talk about the two-wheeler pack, because herein we were building a lot of hopes of a double-digit growth. Well, of course, TVS Motors has indeed outperformed the expectation. A 17% jump on a YY basis is what we have seen, while for Eicher Motors Royal Enfield as well, the numbers are a little better than what the street was expecting. A 22% jump on a YY basis is what the company has registered, while for Hero MotoCorp is just a 2% jump, but on a month-on-month basis, a very strong recovery in their sales data. Over 5 lakhs of units is what the company has sold, and the numbers look in line to what the street was expecting. But a note here is coming in from TVS Motors, where the management is highlighting that there could be some bit of a disruption in the EV supply chain as the EV sales momentum is growing, but there are concerns that the magnet availability is expected to pose challenge in the short to medium term, because do remember a while back even Bajaj Auto came out with this commentary. So this is a development that we have to be watchful of. And lastly, from the tractor division, yes, of course, as expected, the commentary is indeed on the positive side from the likes of M&M as well as tractors. While coming on the numbers, it's been a double-digit growth for Escorts. A 19% jump is what the company has reported. Over 10,000 of units is what they sold in the month of May. Numbers in line to the estimates, but M&M Auto farm numbers are looking better than the street expectation. It's a 10% jump is what the company has reported. Back to you.
Thanks, Srishti, for all those details about May auto sales. With this, it's time to take a quick break, but don't go away. More news and updates will follow on the other side.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Ankur Mishra. Well, while we are penciling in a muted start for the Indian market, let's have Rabinder, who's joining us, to tell us about all the stocks that are expected to buzz in trade today.
Well, as on week of Q4 number, word of an idea can be in focus. The company reported net loss as 7,166 crore as compared to 6,609 crore, and company also reported net revenue at rupees 11,114 crore. Apart from this, Titagarh Rail can be in focus on back of Q4 earning, where company's EBITDA saw a decline of 21% year-on-year basis. And if we talk about margin, then margin also saw a decline of 200 basis point year-on-year basis. So back of this week Q4 number, Titagarh Rail can be in focus. Moving to Ircon International can be in focus on where East Central Railway has awarded the work order to Ircon International of rupees 1,068 crore order contracts domestic and domestic work order. Apart from this, Adani Energy can be in focus, where company has executed a share purchase agreement with REC Power Development and Consultancy Limited for acquiring 100% equity shares of WRNES Talegaon Power Transmission Limited. Apart from this, Indian Oil can be in focus, where company has finalized the cost of producing green hydrogen as its plans to set up a 10,000 ton per year green hydrogen plant at its Panipat refinery and petrochemical complex. Moving to next, BPCL can be in focus, where board has approved investment in Tikater and Shell Private Limited, which is joint venture company of Tikater Group and Shell Gas VV in domain of manufacturing and marketing of added bitumen. And board has also approved the replacing of existing old catalytic cracking unit and fluid catalytic unit at Mumbai refinery at a gross expenditure of rupees 14,200 crore. Apart from this, Cipla can be in focus, where USFD has conducted a current GMP practices inspection at company's manufacturing facility, and on conclusion of the inspection, the company has received one observation in form 483. Canada Bank can be in focus, where board meet is scheduled to be held on 20 June 2025 to consider fundraise. And lastly, Dr. Reddy can be in focus, where income tax department has assessed the rupees 2,395 crore of income may have escaped taxation due to merger of Dr. Reddy Holding Limited with Dr. Reddy Lab.
All right, Ravinder, thank you so much for breaking it down. Which stocks should be in your radar today before opening of market? But with this, it is time to say goodbye in this edition of Market Cafe due to paucity of time. But do not forget to watch the market which is coming up next to navigate how you should navigate further.
बदल रहा है भारत, आगे बढ़ रहा है. If you like this video, then like, share and subscribe to ET Now.